Bitcoin can't function as a global monetary system today. If Bitcoin gets to $500,000 to $1 million, that conversation is going to start to change pretty quick.
As the Bitcoin price continues to stay stagnant, today I dive into the long-term adoption thesis for Bitcoin and where we currently stand. Will it become a globally trusted store of value? What about a globally accepted medium of exchange? What exactly is holding it back from reaching dominant global money status? Plus, stick around till the end because we'll talk about popular price prediction models like stock to flow and the new power law to see if they have any validity for charting the future price of Bitcoin. What's up, everyone? I'm Hurley, Director of Content here at Swan. I hope you had a great Labor Day weekend. Now let's talk Bitcoin. As mentioned in the intro, the Bitcoin USD exchange rate has stayed pretty stagnant over the weekend, sticking around the 58,000 support level. So I thought it was a great opportunity to do a deep dive on the long game theory of Bitcoin from a monetary history perspective. When looking at the origins of money throughout human history, the natural monetization process tends to go through 4 distinct phases. They tend to start off as novelty collectibles. All prehistoric money, like beads and shells, all the way up to gold, started off as collectibles. The next stage of monetization is a pivotal one, because it's when that money becomes a viable and universally used store of value. This happens when the collectible emerges as being increasingly valuable to other humans. Gold took thousands of years to emerge as the dominant and universally accepted store of value that it still holds to this day. Only once there is widespread acceptance as a store of value can the money enter the next phase, which is medium of exchange, where it's widely used to transact for goods and services. And the final phase in the evolution of money is unit of account, which means energy and commodities are widely priced in it throughout the world. For more detailed information on monetary history and the origins of money, check out Vijay Boyapati's brilliant article from 2018, The Bullish Case for Bitcoin, and Nick Szabo's 2002 long-form article, Shelling Out. I'll leave the links in the description. Eric Yakes, author of the excellent book The Seventh Property, recently sat down with Peter McCormick to talk about these adoption cycles for Bitcoin and where we currently stand.
We expect there to be like 3 primary adoption cycles. Everybody's like shows like an S-curve adoption chart and they're like, okay, we're like this early, we're down here, we're before the early adopter phase or whatever. And I think that there's going to be like 3 primary major cycles, and we're just in the first, which is the store of value phase, because the other phases of adoption are dependent upon us achieving this large market size as a store of value. And we view, from like a capital allocation perspective, technologies and infrastructure that enables Bitcoin as a store of value today as being the most relevant. And they're going to bring it to the next step so that it can get into the medium exchange and unit of account type phase. And that's just like basic on-ramps, financial services, all these things that might be considered boring and not like deep tech, like ZK rollups, things like that, but just like very boring technologies that are increasing access to Bitcoin in some sort of way and using it as a store of value.
Yeah, and there has been a significant investment in store of value technologies. I mean, I met a really interesting company today whereby they have combined private client services with a multi-sig wallet, for example.
Yeah, exactly.
Yeah. And so, we've seen a lot of that. We've seen this multi-institutional custody solutions that are coming on board. And a lot of the medium exchange companies have failed because the market isn't there for it.
Right.
But the market's coming.
Yep. I think we're going to have a pretty good idea when we're getting close to it, because it's going to be wild when we're getting close to it. But like, it's, so like you'll see it in some of my writing, right? Like I think very prospectively about things. We're definitely thinking about the next phase. But from like, behind the scenes investment approach, we're thinking about the current phase. What's investable today? What can be monetized within 5 to 7 year time horizon? And all of that is really focused on store of value type functions. I think if Bitcoin gets to $500,000 to $1 million, that conversation is going to start to change pretty quick. And, beyond that, it's really hard to say prospectively just how big some of it can be.
I tend to agree with Yakes that we are still quite early in the store of value phase for Bitcoin adoption. Have a look at this chart from way back in 2018. Now, this definitely needs an update. I think we can take this "We Are Here" star and firmly tuck it 1 or 2 green diamonds below reliable store of value. But you can see up here we have widespread medium of exchange, and finally convenient unit of account, and then the finish line, full global money at the top. So what's stopping Bitcoin from breaking through the reliable store of value phase? I would say its intense volatility is still a limiting factor. Because of the volatility, many still view it as a highly risky speculative asset. A great example of how early we are to the widespread acceptance of Bitcoin as a store of value is the Saylor MicroStrategy playbook not being copied by more large publicly traded companies. On paper, what Saylor has done with his Bitcoin strategy for the company looks genius, but I suspect many C-suite executives see this and are not yet convinced that past performance will equal future results. Maybe Saylor just got lucky, right? So two things that will definitely help jumpstart the store of value phase and maybe help us enter the medium of exchange phase is Bitcoin's price being much higher than it is now and its volatility being much lower. And the volatility is dropping. Take a look at this chart on the bottom from Joe Consorti that shows the BTC Volatility Index dropping significantly over the past 2 years. Now, I and many others believe that the next 5 years of Bitcoin will be pivotal in its journey to becoming a widespread accepted store of value. Just take a look at this bullish clip from Howard Lutnick, CEO of Cantor Fitzgerald, an investment firm.
I guess the easiest way to get a clear view of where Bitcoin is going over the next 5 years is take a look at the last 5. Right? The last 5, Bitcoin has been an outsider in the finance business, but coming closer and closer and closer. Right now, there's an ETF just starting to go a little bit mainstream, maybe a toe in the water of mainstream, but banks still can't clear it. Banks still can't transact in it. Banks still can't custodian it. Banks still won't transact in it, and they won't finance it yet. I think people misunderstand traditional financial service companies. They want to transact in Bitcoin. They want new asset classes to transact in. That's just a good thing, but they need the regulator to say it's okay. Right now, today, right? If a bank were to hold your Bitcoin, they would have to set aside their own money equal to that amount in sort of like in a jail. I mean, you'd say, well, that's crazy. The answer is, that's why they don't hold it. But if you let them hold it, if the regulatory environment was good, you will see all the traditional financial service companies, the big banks, the big brokerage companies, they're all going to go headfirst into Bitcoin pond. That's what's going to happen, and it's coming. It's a slow, steady process, but eventually there's going to be a CFTC chair who says, you know what, Bitcoin is a financial asset, and we're going to treat it as such. And when that happens, you're going to see Bitcoin move in a very, very strong, positive direction. So that's why I'm a fan of Bitcoin. It's going to go much higher. It always bounces around like any other financial asset, but ultimately over the next 5 years, as it gets invited into this party, up we go.
So favorable regulation, financial products like the ETFs, and further widespread acceptance is leading Bitcoin to being held by institutions, banks, and eventually nation states. So why is about 5 years a good estimate for when the next phase will begin? It has something to do with what's called the Lindy effect. Simply put, the Lindy effect suggests that the longer something remains in existence, the greater society's confidence that it will continue to exist long into the future. So once Bitcoin has existed for 20 years, there will be near universal acceptance that Bitcoin will be around forever, much like people believe that the internet is a permanent feature in the modern world. Bitcoin turns 16 this January, so we're only about 4.5 years from reaching that 20-year threshold. So we can roughly estimate the future acceptance of Bitcoin as global money through these adoption phases. But be wary of any price models that claim to know the future price of Bitcoin at any given time. We had the stock to flow model in 2021 that admittedly duped me into believing we would go to 150,000 plus last cycle. And now this cycle, we have the power law that suggests we can similarly know exactly when Bitcoin will be worth $500,000 and $1 million per coin. No model can predict when a single billionaire puts 1 to 5% of their wealth in Bitcoin. No model can predict the over-leveraged and fraudulent implosion of exchanges like FTX and lending and yield services like BlockFi. No model can predict the next black swan event or global liquidity crisis that causes assets to crash. No model can predict the next sovereign nation from stacking Bitcoin as a reserve asset. No model can predict collective human psychology. This is a game of attrition. Bitcoin just needs to continue growing in the same line of adoption of past technologies for it to eventually take over as the dominant money. As long as Bitcoin adoption is increasing, and it is, I'm confident in the long-term investment thesis of Bitcoin and the price continuing to go up. So if you don't want to go deep down the rabbit hole and invest 100 plus hours in learning more about Bitcoin, perhaps the best thing to do is put 1 to 5% of your wealth into it and forget about it for 5 to 10 years. And you can do that with the financial services offered by Swan. Visit swan.com or download the app at swan.com/app, sign up and purchase Bitcoin and take self-custody in minutes. Plus you get your first or your next 10,000 in Bitcoin purchases with 0 fees. Swan also offers extensive educational resources and services to help you on your journey to financial freedom. Check out what we offer at swan.com. That's it for today. Let me know what you think of all this in the comments. I'd love to hear your thoughts and any suggestions you have for future videos. Please like this video for the algo and subscribe to the channel if you haven't already. Plus, check out these other videos that YouTube thinks you'll enjoy. And until next time, TikTok, next block.